Hello everyone, good evening. Today we are going to discuss one question which is from A level, and for the month it is past year paper from it. The series of this paper is May June 2020. Okay, so we are going to discuss our question number 3. In question number 3 there is a two partner, so we just wrap it out fast. Okay, so in question number 3, it is clearly visible here. I think all of you is very clear. Here it is very clear. Ang and Kim is having a partnership with a ratio of 3:2. Okay, they are having their balances, assets, liability, capital, and everything is given to you. Current account. Okay, so from here to here everything is clear. Assets and liability is already given to you. Okay, now what happened, the partnership is taken over by X Limited on 4th January 2020, and X Limited took over the assets. Okay, and they took over the assets with these values. So for office equipment, they choose the value 35,600, one motor vehicle 20,000, inventory 20% increase. So what is the value of inventory? Inventory value is your inventory value is 11,400. So 11,400 plus 1 plus 0.20. Okay, because 20% it is increased, so it means it increased and the final value is 13,680. Okay, and for the trade receivable, there is a provision for doubtful debts. So provision for doubtful debts are always decreased by the debtor or trade receivable. So the value of the trade receivable, it is given to you in the question, that is 1950, and because we are going to deduct it, so 1 minus 0.04. Okay, so it is 18,720. So it's up to you if you're going to use this method, or just calculate 4% on 1950 and then deduct that value, and then you get this value. Okay, so in this question just recheck the value, please. Okay, so trade receivable is 19,500 and inventory is 11,400. Okay, so 11,400 and 19,500, which we already taken. Okay, so next is goodwill. So in the case of goodwill, they ask you to calculate the goodwill on the basis of average profit. Okay, so average profit basis means you have to add all these profits, and then because you're having 3 years profit, so you have to divide it by 3. So 26,000, 31, 39,000, you have to add it and divided it by 3. So your goodwill is it's $32,000. Okay, very good. Now this thing is clear. Okay, moving forward, in the second part they told you like instead of paying purchase consideration, they just issued 50,000 ordinary share with 1 each and with the premium of 0.80. So premium means you have to add that value. So rate per share is $1 plus 0.80, so 1.80. Okay, this is your rate per share. Trade payable is taken settled in full. So whatever the trade payable value, it's 13,700, I guess. Let me check later on. Okay, so full settled by 13,000 by the partners. Okay, the motor vehicle is taken over by the Ang, that is for the value he's taken for the motor vehicle is $10,000. Okay, and the realization cost expenses, it is 3,700. So now the first question is in front of you to calculate the purchase consideration. So purchase consideration, it's very easy. Okay, why it is easy? Because half of the work you already completed here, because in this point it is clearly given. Now for purchase consideration, what you have to do, add office furniture 35,000. Okay, purchase consideration. A part. Office equipment, that is 35,600. Then motor vehicle, that is 20,000. And then inventory, okay, that is 13,680. Okay, then trade receivable, that is trade receivable is 18,720. And goodwill, that is 32,000. And then we have to add all these. So our purchase consideration is 120,000. Okay, so I think this concept is clear to you. We have to add all the assets that taken by the X Limited, okay, with their value, whatever the value it is decided, you have to take that value. Okay, now you have to, in the B part, they ask you to prepare a realization account. How you going to prepare realization account? Okay, for that you need to know how to prepare the format. Okay, what is the format? For that, in yesterday's video where I uploaded a video related to the theory of partnership, over there also I cleared the realization account format. If it is not clear to you, okay, we are going to discuss it now, because now we are having a figures in front of us. Okay, so how we are going to do it? First of all, the basic concept which you need to know. Okay, so first you need to record your assets this side, okay, debit side, whatever the book value you're having for that assets, okay, and the liability with the book value this side, credit side. And then, because in realization we sold our assets so that we can pay our liability, okay, so assets can be sold to anyone. If we've sold it out, so we have to just record bank, and whatever the assets, suppose motor vehicle or suppose furniture, so we have to record that value. Okay, and if that assets was taken, suppose motor vehicle is taken by the one partner, A partner, so you have to write A's capital account and motor vehicle and that value. Okay, here same goes with in the case of liability also. If liability were going to be realized, okay, so we have to record it on the debit side. If we are going to pay that liability, so just record bank, and if suppose that liability is creditor, okay, you pay trade payable or creditor, so just record it, whatever the amount it is given to you. Okay, if any partner realize it, if any partner try to pay it out or whatever the amount, we are not going to calculate our profit and loss. Okay, we just follow the question. If it is paid like A partner B pay creditor of this much, okay, this much value, so you have to record that. Okay, then settle your account. Okay, and if the difference comes on a debit side, it means there is a profit on realization, and if it is on credit side, then loss on realization. Okay, and the profit and loss, whatever the partners we are having, we have to share it in our old ratio. Okay, so now in this question, first of all, we need to find out what is our assets and what is our liability. Okay, so I'm just going to take it out, so you just have to remember that value. Okay, so what is our assets here? Okay, office equipment, so we are going to record office equipment 42,400, then motor vehicle, then inventory, then trade receivable. Okay, and then trade, in the case of, okay, here we are going to prepare office equipment 42,400, motor vehicle 27,700, this is 7. Okay, okay, inventory, that is 11,400, then trade receivable, that is 19,500. Okay, then we are having a liability, trade payable. So liability we have to record this side, trade payable 13,700. Okay. Now in this realization account, just remember this thing: no need to record cash, no need to record bank, no need to record bank OD, okay, and no need to record capital and current account balance. Okay, except that every assets and every liability you have to record it. Now moving forward, means in the third point they said trade payable were settled in full. So 13,000 they are settling for trade payable. So if liability we are going to pay it, so we just have to write bank trade payable 13,000. Okay. Now in the next point, the other motor vehicle was taken over by Ang 10,000. So motor vehicle is taken by Ang. Okay, so we have to record by the Ang's name. So here Ang's capital account and motor vehicle, that is 10,000. Okay. Okay, and X limited purchase consideration, which we calculated at the time of when we calculated it in A part. Okay, so X limited purchase consideration. Okay, so that's it, there is nothing else. Or just recheck. Okay, in the fifth point they ask you, they give you information regarding the realization cost, that is 3,700, which is paid by the partnership. Okay, so again bank, or you can write realization expenses, that is your 3,700. Okay, now what you supposed to do, just add both side, debit as well as the credit side. Okay, so what is the total of debit side? The total of debit and credit side, okay, so 143,700 is the total of credit side, and we have to write for 143,700 this side also. Then from 143,700 we have to deduct 42,400, 27,700, 11,400, 19,500, 13,700 and 3,700. Then we get to know like 2,600 is our profit. Okay, so we have to write profit on realization, and then we are having two partner. Okay, that is Ang and the another one is Kim, and the ratio is also given to you, that is 3:2. So 26,000 we are going to divide this 26,000 in 3:2. So that's come around 15,600. Okay, and the 10,400. Okay, so I think this much is clear to you. So this is your B part, where they ask you to find out the realization account. Again I'm going to explain. First of all, we recorded assets, okay, this side, and then the liability this side, and then if there is a purchase consideration this side. Okay, then this liability, if this liability paying off, so we have to record bank or any partner paid, so that partner's name. And if the assets were sold it out, so bank. Okay, and if any partner taken care of that asset, so that partner's name. Okay, then add both values, both sides, debit and credit side. Okay, and if the difference arises in the debit side, it means there is a profit. Distribute in a old ratio among all partners, and same in the case vice versa in the case of credit side. If you find any difference in the credit side, it means you are having a loss on realization, and again using the whole ratio. Okay, so I think B part is clear. Okay, let's move forward. They want you to prepare partners capital account in a columnary form. So okay, we are going to prepare partners capital account. How we are going to prepare partners capital account, and how many partners we are having? We are having two partners. Okay, okay, so we are having two partner. One is Ang, and the another one is Kim. Another is Kim, Ang and Kim. Okay, so first of all, in partners capital account, in question you have to search about the capital. What is your capital given to you in the question? Okay, so yes, it is given here. Capital balance you are having and current account balance also you are having. Okay, so it's better we can make partners capital account here. Okay, so first of all, buy balance brought down. Okay, so brought down Ang capital and Kim capital you are having, so 42,000 and 38,000. Then you're having your current account. Okay, so current account debit balance, current account debit balance is 2,500 for Ang, this is for Kim, Ang and Kim, and again current account and 5,300. Okay, okay, so now in this question you are getting a realization profit, so you have to record it this side, realization profit, that is 15,600 and 10,400. Okay, yes, and one more thing is that one asset is taken by Ang. Okay, here we record it in like this way, 10,000. So we have to record like this, motor vehicle which is taken by the Ang, so 10,000 this side. Okay, if any liability is taken by, suppose this trade paper is taken care by Kim, so we, instead of writing bank here, first of all we write Kim's name here, and then in this side we are going to record like this, Kim's in Kim's account we are going to record, and here we are going to record the trade payable this way, and then in Kim's account. Okay, so now moving forward, there is one point in the question in which X Limited settled the purchase consideration. Okay, and okay, 50,000, $1 each with the premium 1.80 share, and what they ask, remainder in cash. Okay, ordinary share were allotted to the partner equally, so they allotted this their share to the ordinary, means ordinary share they want to distribute equally. So how you are going to calculate that? So first you need to calculate the value. So because you are having 50,000 ordinary shares, and now instead of $1 you are having 1.80, so just multiply this value, then you'll get 90,000. So total amount is 90,000 from the ordinary share, and this partner equally, it allocated to the partners equally, so 45,000 and 45,000. Okay, so here we have to record this value 45 in the partners capital account. So here we can write ordinary shares 45,000 and 45,000. Okay, so X Limited's ordinary share. Now whatever the difference arises, we have to record it by the bank or by the cash. Okay, so 42,000 plus 15,600 is 57,600. Okay, 57,600. From 57,600 you have to deduct 2,500, 10,000 and 45,000. Then 100 you are having, So just record 100 this side. Okay, bank account 100. Okay, now 45,000, and here it is 10,400, 5,300, 38,000. So it means this side is greater. So the total is 53,700. 53,700, and from 53,700 we have to deduct this 45,000, so 8,700. So this is our balancing figure for the PCM. Okay, I think this much is clear to you. Okay, in the C part we cleared it. Okay, additional information. So what happened after issuing 50,000 ordinary share to Angin Kim, X Limited had an issued ordinary share capital of 300,000. Okay, so now what happened? Angin Kim were appointed as director of X Limited, and each receiving 25,000 per month as a director fees. Okay, because Ang and Kim sold their partnership to X Limited, but X Limited wants to appoint them as a director, and X Limited paid them 25,000 per month as a fees. Okay. Okay. So X Limited and each received 25,000. So it's an income of Ang and Kim if they join the X Limited to X Limited. X Limited forecast the total profit for 2020 after acquisition increased by 60,000 to 260,000. Okay, it is expected that dividend paid for 2020 will be 0.65 per share. So these all are forecasting. Okay, in the D part they ask you to just suggest 3 reasons for forecasting increase in profit, okay, in 2020. So why they forecast this thing, like there is an increase in profit in 2020 here na, they forecast this thing. So the 3 valid reason you have to give. So first is because experience or from Ang and Kim they are going to use, okay, and maybe more customer with, because if the customer increase their profit will increase, okay, or due to the economy of scale, okay, and that's it. They need only 3 reasons, so these 3 you can use. Okay, in E part they discuss whether or not Ang and Kim made the right decision to sell the partnership business to X Limited. Okay, justify your answer giving both financially and non-financially. So this is 5 marks question. Okay, so first we are going to conclude our answer with on the basis of financial reasons, and then later on non-financial. Okay, so first of all we have to analyze, like, look, Ang and Kim, they both are partner, right? So in 2009 they earn a profit. Okay, they earn a profit. Average profit for them is 39,000. Okay, and you know the ratio also, that is 3:2. So in 2009, if you're going to calculate the income of Ang, that is 39,000 into 3 by 5, 23,400. Okay, and same for the Kim, 39,000, same way we are going to 2 by 5. Okay, because all ratio is 3:2. So 15,600. Okay, now what happened, because there is some dividend also if they join that firm. So Ang means 50,000 ordinary shares were there, plus dividend paid on that is 0.65, 50,000. Okay, total ordinary share is 50,000. So in the share, like 25,000 for the Ang, and for Kim again 25,000, because ordinary shares we are having 50,000. So 50,000 we are going to divide equally to 25,000, 25,000, and 25,000, 25,000 plus in that, because earlier it is of face value of $1, so means 25,000, 25,000, and plus now in that you're getting a dividend also. Okay, so dividend is 0.65, so 25,000 into 0.65, where we get this thing here. Okay, same for the Kim, 25,000 into 0.65. So after calculating this, 16,250 plus 25,000, same for this, 16,250 plus 25,000. It means total is 41,250 each. Okay, so expected income for both. Now this is the thing, this is the expected income for both. Now we have to compare the value. Okay, how we are going to compare? Okay, Ang will receive how much? Ang will receive, okay, so Ang will receive 41,250 expected. Okay, and 23,400 earlier, so he received more. Earlier he received only 23,400 as income, now 41,250, so 17,850 more they receive. What about the Kim? Kim also getting this value if they join that firm, that X Limited company, and 15,600 they got earlier, so again they're also getting more, that is 25,650. Okay, increased value. Okay, so now what is the final answer? So basically the one, this is totally like, yes, they have to join. Okay, our financial reasons are because they ask you to show financially and non-financially also. So financially, yes, because they earn more. Okay, after joining there, because apart from the share, apart from the income, they got the dividend also on that, and director fees also. No, director fees they gave you 50,000, so 50,000 director fees, total 25,000, 25,000 each director on that, you are getting that 0.65 also. Now here look, here it is given like 25,000 per annum they provide you the director fees. So 25,000 director fees is this director fees, and which I told you earlier, like 50,000 is the ordinary dividend, so 50,000 we are going to divide it equally, so 25,000, 25,000, and 25,000 into the dividend rate, which is here it is given in the question, 0.65. Okay, so now there means if they're going to join that X Limited company, they earn 41,250, 41,250. But earlier in 2019 they only earned 2340 Ang, and Kim earned 15,600, which is very low, so they earn more. So yes, joining to that company is a good decision. Now this is financial reasons. Now non-financial reasons. The first thing is, earlier it is totally depend on their working style, how they are going to, means when if they are doing well in their partnership business, they earn more. If not, means the income is not very much fixed. Okay, but now after joining, because they get director fees, okay, 25,000 now, 25,000 getting, and Kim also getting 25,000, so that director fees is fixed, so it's fixed income. Okay, or you can say it's stable income for them. Okay, the another thing is they both can participate, because they are director now, so both can participate in managerial decision. Okay. So yes, they have to join. Okay, they have to join the business. The decision is right. Okay, so that's it. I think everything is clear to you. Okay, if you're having any if you're having any problem, please let me know and mention it in a comment box. If you find anything difficulty or any confusion, please let me know. Okay, bye bye.